Hi guys, this is Mark Shawson, the Pattern Trader, and Hamish was good enough to post a review on our website, and I'd like to read that for you. So Hamish says, being new to Mark's Elite Package program and his weekly trading sessions, I really enjoyed the amount of detail that he goes into to explain each chart, and he explains whether he sees any opportunity or to leave it alone. You really feel the 30 plus years experience that he brings to the table. I've signed up to other mentors before, but working with Mark in the short term has already given me the confidence to place more important trades, including risk management and worry less. This week, his recommendation on the silver trade has already paid for his monthly fee and much, much more. So that was from Hamish, so I really thank Hamish for that. And what Hamish was referring to was that I recommended that our members get long on spot silver at 1847 and then 1911 and then 1941. And we finally blew out our positions at 2587, making cumulatively many, many hundreds of pips and more. I'll show you those trades in just a moment. But really what I want to talk today about is you've often heard the phrase, the trend is your friend, don't go against the trend. And that is basically true. You know, fighting a bucking bronco sometimes is never a good idea. But like all good things, sometimes trends do end. They get extended, they get overbought, or they just end and then they reverse in the other direction. Now, what I'm alluding to is spot gold. So gold has been on an absolute tear since breaking out of an inverted head and shoulders bullish price pattern several months ago at the $1,360 level. Gold bolted to close to $2,100 yesterday. But I was seeing some price action that indicated that this rally looked like it was significantly overbought, that it was significantly extended, that the volatility was increasing week over week. And then I saw a couple of reversal price patterns that I thought was a low risk opportunity for me to get on the other side of this trade. So again, sometimes fighting a bucking bronco is never good, but there are times. And again, I just let the market tell me those times. This isn't instinct. This isn't gut feel. This isn't like this can't go on forever type of thing. I see specific trading action in the market. I'm going to show you an email that I sent to our elite members yesterday where I actually recommended shorting gold at 2017. Gold was trading about 2026 at the time. I recommended putting in a sell stop. The sell stop got triggered, and then I had a take profit. Turns out I really fucked up on this trade because my take profit, even though I took profit for 300 pips in less than a few hours, in a moment I'll show you the real-time chart of gold, and gold has bolted significantly below that. But you know, I was able to net over 6 figures on this trade, and this just shows you that sometimes you can leg into what I call these counter trend trades. So the main trend in gold has been up for many, many months, many weeks, and that has been the main trend. But I hopped in what I call a counter trend, where I went against the main trend. And again, this wasn't just on, you know, arbitrary instinct. It was on specific price action. And now I'm going to go and show you exactly what I was looking at on the real-time charts that got me into the 6-figure trade and got Hamish into the silver trades that he made obviously many, many thousands of dollars on. So before I go to the real-time chart of the gold price action today, I want to just talk about some of the silver trades that Hamish alluded to in his review. This is an email that went to our elite members on July the 7th at 7:10 p.m. And you can see the recommendation was to buy silver at 1847. At that time, I was looking at the daily chart. You can see the double bottom price pattern, the ascending triangle, and then this key reversal. And then I recommended that our members place a buy stop at 1847. That order was triggered, and you'll see that eventually we got out 750 pips higher. And you can see I look at the price action, then I set up the trade with the stop loss and the take profit. And you'll also notice that the take profit at the time the email went out was 21.87. But as I saw prices move in my favor, I kept on moving the take profit, and we got out at a price of $25.87, 750 pips higher than the entry. So you can see this is a repeat of yesterday's trade, which was not triggered. My trades are on buy stop, so it requires the market to confirm what I'm looking at, so it was not triggered. But I like the setup so favorably, I recommended it again. And you can see, I said after establishing a number of bullish price patterns, silver appears on the cusp of breaking above a long-term historical resistance between $19 and 21 cents. And as we know, prices went to over $30 recently. Now I'm looking at an email that went out to our weekly members, and again it was a recommendation to add to the silver trade with a recommendation of a buy stop in silver at 1911. At the time I said I'm currently long silver at 1847 and I'm looking to add to my position. Now this email was part of our weekly video report. You can see it's an extensive email that shows a number of markets, what I'm looking at in the dollar index and a number of other markets. It includes a weekly video report that's usually about 25 to 30 minutes long where I review all of the markets in detail, and this is part of our weekly video report email. Now this was another email that went out on July 14th. And remember, I already had two positions long silver, but the price action was so robust, so favorable, I recommended our members to add a third position at 1941. And you can see I said I'm currently long silver at 1847 on July 8th and 1911 on July 13th, but I'm looking to add to my position based on the favorable price action. This is an extract from my trading platform which reflects some of the trades that I took in silver recently, getting in at the 1847 area, the 1941, and then taking out about $950,000 now. These positions were leveraged, which magnified my profits, but reflected still adequate risk control based on the amount of money that was in the account. So this was significantly leveraged, usually around 10 times higher than typical leverage based on the robust price action. I, again, stepped it up. And this is what occurred, and you can see why Hamish also said that he made so much money to pay for his elite program. Now I'm going to take you to the email that I sent out just yesterday, alerting our members to go short gold. You can see that I was recommending a sell stop at the $2,017 area. You can see at the time gold was trading at $2,025. Some 80 pips higher than where the sell stop was, but based on what I was looking on the key reversal and the inside bar, and I'll show you that on the real-time chart in a moment, I was putting my sell stop a hair under the lows. I wanted to confirm the momentum in what was a raging bull market. And as you can see in my email, I said despite the hype, I'm starting to get the feeling that XAUUSD, which is spot gold, is getting overbought. Penetration below the low of the recent key reversal and inside day bar price action combination could yield a good pop to the downside. Now, again, I didn't know how robust that pop would be, and so I put my take profit at 1987. Ordinarily, obviously, I'd be happy to, pocket $30 on a quick pop in a counter trend trade. That's why I was fairly conservative with my take profit. And you can see that not only did the 1987 take profit get triggered, but gold went well below that. But I'll take the quick yield. Now I'm looking at the real-time trading action of XAUUSD. This is the ticker symbol for spot gold, and I'm looking at the daily chart, which means that each one of these price bars represents one daily price session. And you can see following breaking out of this inverted head and shoulders price pattern that gold set off on a tear. So an inverted head and shoulders is just what it sounds like. It's an upside down head and shoulders price pattern, which is a bullish price pattern, which indicates once this pattern was completed and went through the neckline, that you would see bullish price action ensue thereafter. That was around the $1,700 price level, and you can see that prices rocketed to $2,100 following the signal from that inverted head and shoulders. But over the last couple of days, I've been noticing that gold is stalling out and putting on both a reversal and an inside day bar. So what do I mean by reversal? A key reversal. So this is why I look at daily bars. People often ask why I don't follow candlesticks, and each to his own. But really what I like to see is how a market closes relative to the high and low. So you can see that after making an all-time high in gold, by the end of the day, the sellers were in control. So the market made a new high and then it set back. I call this a key reversal because it was a sizable bar. It was about $80 or so, so fairly significant. And then in addition to that, we had this inside bar. Now an inside bar literally means the range from high to low of that particular trading session sits within the range of the previous. So I call this a narrow range bar or an inside day bar. But what this represents is a coil. And a coil, the best metaphor I always use is, picture a beach ball. You put your hand on top of a beach ball, you press it down underwater, you press it further, 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 and then you let your hand off. What happens? The pressure just uncoils and releases. In this case, I had a feeling it was going to release to the downside by virtue of the previous day stall and key reversal, then the inside day bar. But, look, I still wasn't sure. So that's why I recommended to our members to put a sell stop a hair under the lows at 2017. Now, if the market turned around, in the following session and went higher, no harm, no foul. The sell stop wouldn't be triggered. By triggering under the lows, it then indicated that we were going to have an explosion to the downside, and that's exactly what we saw. And again, I was fairly conservative. I was happy to take out, 300 pips on a quick pop. So, my take profit was somewhere around there. Again, this was a counter trend trade in an explosive bull market. So I felt that I was right, but I didn't know, how far this would go in one shot. And you can see that it is extended well below my anticipated price trajectory, but as I said, pocketing a quick 300 pips in a few hours is not bad on a counter trend trade. So this was the outcome of my correct interpretation of the counter trend price action in XAUUSD, where I sold short spot gold at 2017 and I covered at 1987, 300 pips lower, and pocketed a nifty six-figure windfall in just a few hours. So this is the outcome of my trading methodology. So I hope you got a ton of input from this video. Now our elite program is the highest value program that we offer. It is somewhat expensive, and if you don't know me, this isn't something that I recommend you look at right away. The best way to leg in, to put a toe in the water, get a feel for my trading methodology, is to sign up for my weekly video report. And this is really a no-brainer offer because you can pay anything you want for the weekly video report. So you decide what the value of this information is, and then sign up for the weekly video report. I'll attach a download for the weekly video report alongside this video. So with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.